The Elon Musk stimulus check could be coming, according to Donald Trump. In a new speech out tonight, Trump actually said something else that was very bullish for Tesla. If you guys are not following me on X already, then you're going to have no idea what this is. But good news is, here in this video, I will break it down for you. And I do believe this is the start of a larger rally for Tesla. And sure, I'm bullish on Tesla. I have been bullish on Tesla. And to a large extent, I've been wrong on Tesla. In recent days, weeks, and the last really 2 months, Wall Street has not cared a rat's ass what Tesla has to say. The good news, it's all overshadowed by this quote-unquote brand destruction that just isn't happening. I mean, when 95% of sound-minded Americans believe that cutting back this wasteful spending is a good thing, and you have the small minority of people in America that believe Elon is some kind of, the N-word here, that, Nazi word. I guess I can say that on Google now without getting shadow banned. But, we pay a lot of attention to that because it's something that we don't see all the time. Many of us, don't know anyone that kind of disagrees with providing condoms to, Africa or circumcisions in Zimbabwe as a good investment for the U.S. Point aside, there's obviously some errors there, and I will agree with some people that maybe making these brash cuts is not the best way to go about things, but when there's a crisis, you gotta act quickly. Possible good news is, you could be looking at a stimulus check soon, and I will share the details and the latest with you in this video. Positive news for Tesla, and really just overall a speech today that makes me even more bullish on markets, and specifically on Tesla stock. I felt the urgency to make this video a third video late at night because it's something I think you need to know now that will be impacting markets right now. And especially as Tesla had a good day today. I mean, Tesla was a clear outperformer. No questions about that. I think this could be important. So, with that said, ladies and gentlemen, hit that like button and subscribe to the channel. Let me know your thoughts on this down below in the comments section, and let's get into it.
Inflation and saving taxpayers billions and billions of dollars every single day, and there's even under consideration a new concept where we give 20% of the DOGE savings to American citizens and 20% goes to paying down debt, because the numbers are incredible, Elon. So many billions of dollars, billions, hundreds of billions, and we're thinking about giving 20% back to the American citizens and 20% down to pay back debt and pay down debt, which is, if you look at value, if it were a real estate balance sheet, the debt is tiny, but we still want to pay it down. Doesn't matter. We don't look at it as a piece of real estate. It's America. We're going to get it down through intelligence, hard work, and as Elon said, a word called caring. You have to care. By doing this, Americans will tell us where there's waste. They'll be reporting it themselves. They participate in the process of saving money. So many of the men and women in this room, as an example, they pay tremendous amounts of taxes. And here are just a few examples of where your money was going before I came along. These are just some of just taken at random. Oh, there are much worse examples than this. I was just looking at them before the speech, and I can tell you they were much worse. And there are some that are horrible, but I don't want to really say them because they're very, very embarrassing to people. Very, very embarrassing. And they're really something, but you'll be seeing it and you will be reading about it. But just some taken at random. $2 million for sex change operations in Guatemala, $20 million for Sesame Street performances in Iraq. $20 million, that's a lot of money. I know what it costs to do those things. You get a cast over for $50,000, give them a couple of bucks tip, and that's it, not 20 million. 20 million, that's Gone with the Wind on steroids. $101 million for 29 diversity, equity, and inclusion contracts at the Department of Education. Wow. And we've canceled all of these, saved all of this money. And again, this is just a small sample. This could go on. I could read them all day. $520 million for a consultant. I want to know, who is that consultant?
Now, I know what most of you guys are thinking. How big would this Elon stimulus check be for American taxpayers? Well, according to the national debt and the amount of money that DOGE has saved, around $115 billion, if a check were to go out today to the roughly 170 million taxpayers, each taxpayer would receive about $200. That's 20% of the savings from DOGE so far. And it's really like $170, round up a bit to 200. That's how I get that number. So it's not super tiny, but it's not super large as well. A lot of you guys are going to say, well, what about inflation? You know, that is a bad idea because inflation. Couple things there. Number one is, yes, in principle, in logic, when you give money out, it's inflationary. But the reality is, it would not be inflationary. Kind of like the first round of stimulus checks. With the first round of stimulus checks, that was not necessarily inflationary. It was the supply constraints. It was the 3 additional save the economy packages that caused the inflation, and really the continuation of wasteful spending in the government that has been causing the inflation. As the late Milton Friedman once said, inflation doesn't have to do with people spending all their money. Consumers in the history of recent times in America have always spent all their money. Corporations have always been greedy. The only variable is government spending. Now, if you take money from other government programs and give it to people, you're not actually spending more money. It's the same amount of money. In fact, you know, you're net negative potentially on inflation, because it's only 20% of DOGE. You're still saving a bunch of money, right? It's not technically inflationary. Now, that could be great for the economy. I mean, give out, it equals about $23 billion, which, you know, sounds like a lot, but it's really not that much. That money would just go right back into corporate America and likely be a positive for the earnings outlook for this year. I think it'd be pretty hard to you know, miss estimates for SPY, S&P 500 earnings if you just gave everyone $200 additional dollars. That money's going to go right back into the economy. And again, it's not necessarily inflationary due to this dynamic. Now, you would think it would be, but it's really not. Now, at the same time, Trump is, you know, suggesting that they're going to take 20% of that money, around $23 billion, and pay down government debt, which in and of itself is deflationary, would be good for, you know, the fiscal outlook for America. It's not going to move the needle that much, but it's a good sign of confidence if that happens, that America is doing what they need to get the deficit under control. What that would really do is drive down 10-year treasury yields. Now, maybe all of this is just, you know, talking out of his ass. That's a possibility. But that's really what 10-year treasury yields trade off of, is future expectations for government spending, for deficits, and for inflation. And at this point, inflation's not the issue. Inflation's not why treasury yields have, you know, been 4.5%. 5% in recent months and years. It is because of irresponsible government spending and crazy amounts of deficits and government debt. Now, in real time, as this speech was taking place, I was sharing the headlines, so definitely go ahead and follow the X account. And there was quite a few of different headlines on a wide range of topics. The thing that the markets kind of took negative after, you know, markets did go higher in after hours when Trump was talking about giving out the DOGE payments to Americans. Like, the markets like that when we heard that. And then Trump shortly after says soon he will impose these reciprocal tariffs. So that was kind of offsetting some of that good news. Trump also says that if you make your product in the US, you will pay 15%. If you don't, you will pay 21% for a tax. This is, again, positive for corporate America, positive for US earnings. When it comes down to it. And just to elaborate on that more, he says, quote, "We will pass the largest tax cuts in history. No tax on tips, no tax on overtime. We'll save families a lot of money." He also says 100% expensing on new factories or capital. If you buy something good for our country, we will let you expense it. Basically means we will let you write it off. He also said, quote, "I have signed executive orders to keep the US at the forefront of AI and crypto technology," which obviously sounds good for Tesla, S&P, Nvidia, software, AI names, just the general vibe of markets. But this was really the part that stuck out to me as bullish for Tesla specifically. Trump says, quote, "If you build a plant, you will be able to store your own energy next to the plant. Basically create like your own grid on site next to your facility." This is happening a lot today with data centers. Data centers require a lot of energy, and without saying it, that could be what he was referencing. And, with data centers, there's usually not enough energy to power them. That's why they have to be in specific locations. And, well, having megapacks, for an example, being able to have them right there, you generate your own, power and store it, would be exceptionally bullish for Tesla. And you have to get permits for these things. And Trump's saying, we're going to fast track that. So if you build a plant, you build a factory, and you want to put your own energy storage capabilities next to it, you will be able to do that. Okay. That's very bullish for Tesla Megapacks. And as we all know, the Megapack facility in Shanghai just went live about 2 weeks ago. And as that is the fastest growing segment of Tesla's business, I think that overall sounds pretty damn good. It says, quote, "We will get you the energy quickly." And as I did talk about in the last video, Fed Bostic today really came out and sounded aggressively neutral. Like, I don't know how else to say it, but what he said was really offsetting itself, right? Said some things that sounded bad, like January CPI may be a bump or a new trend, reduces confidence in his 2025 outlook. Like, that doesn't sound good. But then he says that policy changes could impact inflation and productivity. Negatively impacting productivity would be really bad for the economy, which would kind of offset the whole, first thing that he said. He notes business leaders are optimistic on regulatory changes, but expect to pass tariff costs to consumers. I mean, that offsets itself, essentially. Says the Fed did not cut too much last year. Policy remains restrictive. That sounds pretty good. Supports balance sheet reduction, but monitoring to avoid over drawdown amid debt ceiling uncertainty. And this is really the thing today, the big news today, that did cause markets to move higher. Because I've had a lot of people actually ask and comment, like, what is QT? And again, for anyone that does not know what QT is, it's part of the reason why 10-year Treasury yields have been high and stubborn. The Fed has rolled off about $2 trillion worth of assets from their balance sheet. We can go ahead and Google this, Fed balance sheet. And just to give you an idea of actually what this looks like, I mean, the Fed's balance sheet went from almost $9 trillion down to where it is today at $6.8 trillion. A lot of that was treasuries. And essentially what QT is they allow about $40 billion per month of treasuries to roll off their balance sheet. I believe it's $40 billion. It could be more than that. It's been a while since I revisited these numbers. They started rolling off assets from their balance sheet in 2022. So it's been a couple years. Tens of billions of dollars of treasuries per month are rolling off their balance sheet. That's the long story short. What that does is it adds supply to the bond market. adding supply to the bond market is like you selling a stock. If someone just keeps selling and keeps selling and keeps selling, the price of that stock is going to fall. So the price of the bond has been falling. Well, when the price falls, the yield is actually the same. That means yields go up, right? Or your actual return on that goes up, okay? So it's like having a $100 stock that pays you $5 a year in dividends. That is a 5% yielding dividend stock. Well, if someone continues to sell that stock and there's this relentless selling pressure and the stock falls to $50, well, it still pays $5 a year in this scenario, but now it's a 10% yielding dividend stock. That is how quantitative tightening works. You're tightening, you're raising the yield on long duration treasuries. Quantitative easing is when the Fed actually goes out and they buy bonds. So, the same thing, right? You go out and buy bonds or buy a dividend stock that pays you $5 a year, $100 dividend stock, but yet you have someone that goes out and is continuously buying that. Next thing you know, it's a $200 stock, still pays you 5%. Now the yield is 2.5% because someone keeps buying that. That is quantitative tightening and quantitative easing down to a science. Now, the technical thing that is going on right now is liquidity is starting to run a little dry. We went from, per day, like 400, 500, 600 billion dollars of overnight reverse repos. Okay. This is excess money that banks are parking with the Fed to earn a, small return. Because banks cannot just sit with a bunch of cash on their balance sheet with the way inflation is. And they're only allowed to, with customer deposits, that is, they're only allowed to go out and make loans or buy treasuries, right? Make investments, essentially. Treasuries, very stringent on what you're allowed to do with customer deposits. So if you don't want to go out and put $400 billion into the treasury yield curve because bonds are volatile, you can park it with the Fed as an alternative. Well, you have run that down from $400, $500, $600 billion or so just back July, August of 2024. You were sitting at those numbers. September of 2024, you were sitting at $400+ billion per day. Now you're down to $73 billion. Recently hitting as low as $50 billion. $54 billion, I believe the number was. Reserves are starting to run a little on the low side. And that is why the Fed is talking about this ending of quantitative tightening. This would really help drive down 10-year treasury yields, which last I checked would be very bullish for Tesla. And that's part of this video as well. I want to make sure we're all on the same page. When the Fed stops this quantitative tightening and goes to a neutral stance where they're not doing anything with their balance sheet, that is going to drive down 10-year treasury yields. That is going to increase the amount of borrowing people can do. And that's going to be positive for Tesla from a business standpoint, but also from a stock perspective. That's a very powerful force. Know what you guys think about this information down below in the comment section. If you have any questions or you still don't understand, let me know down there. Go ahead, follow me on X, comment on one of my posts. That could be a good way to get in touch as well to get a direct question answered. I really try to respond to everyone, but sometimes it's a little bit hard to do because a lot of the time, to be honest, I don't see the comments on my phone. A lot of the times they don't come in as a notification. So if they do come in as a notification, then I try to respond to them as much as possible. And, periodically I'll go through comments and respond to all of them at once, and I will do that for this video as well, because I think it's a very important thing. I think it's a pivotal moment, and especially as Tesla is down a lot, with the good news that we shared in this video, I think it's a good time for Tesla. Good time to be long. I'm not a financial advisor. I'm not a financial planner. I'm not a fortune teller. I could be wrong. Markets could crash. Keep in mind, this is the worst 2-week historical period for markets or for the S&P since 1928. So normally the back half of February, it's a rough period. March is a little bit better, and then April's really good. So if you pay attention to seasonals, that's the setup for the next 2.5 months. Next 2 weeks are bad. March is pretty good, especially the first half of March. Second half's about, neutral. Usually don't do much of anything when all things are said and done. And then April is one of the best months for markets. With that said, have a great rest of your day. Thank you to those of you that support the channel as well. Super thanks, memberships, trading community, all of that. God bless you guys. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.